Hi everyone, welcome back to Signal or Noise. This is episode 6. I'm Charlie Bilello, and with me, as always, Peter Mallouk. Peter, we got a lot to run through today. I want to start out with a question that a lot of people ask, and you probably heard this many times before, but when it comes to retirement, is there a magic number? How much is enough?
There's so much stuff that comes out about this, and you and I have shared a lot about it on social media. And I think the reason it's hard for people to understand is because it's very unique to each individual. So, for example, you can't even just say 250-somethings will need the same amount of money when they retire. So if one's going to live in Florida, that's going to be a very different cost of living than if they want to live in Manhattan. And so where you're going to live is a very, very big variable that can swing things by 30 or 40%. Second, are you going to be debt-free or not in retirement? If you're carrying a mortgage or any other debt, the math is very, very different. Are you retiring young when you still have expenses that retired people traditionally don't have, like paying for a kid's college? Obviously, a big game changer, putting a lot of pressure on the portfolio pre-retirement. Are you retiring before Medicare, which is a very big expense if your employer's not covering it, and most don't? Once you get past the COBRA period, that's another big factor. And then, of course, there's how you're actually going to live, right? Like, what are you going to do? Are you somebody that loves to watch sports all the time on your couch? I've got a family member. That's his dream. He just wants to be home, watch football, basketball all the time. There are other people that they want to, set the world on fire, travel everywhere, have all these experiences. Very, very different outcomes. So it really does help to go through an exercise of, hey, here's what I want, what my retirement actually looks like. Here's where I'm going to live. Here's how old I'm going to be. Here's these expenses I'm still going to have to bear for a period of time, and some I'm going to have to bear permanently. And figuring out what that income spend is, and then go backwards. And usually it's as simple as multiplying the spend, the annual spend, by 25 to give you a ballpark. That's not really ideal. Ideally, you're going further and deeper with a planner, and you're counting from Social Security and rental income and inheritance.
Would that be a conservative number, 25?
Yeah, that to me is a conservative back of the envelope. You're just trying to figure it out.
You probably then at that point wouldn't have to touch the principal, ideally, right. Getting to that. Okay, so it's 100,000 is your income or spending needs, and you have $2.5 million. You should feel reasonably comfortable.
Yeah,
back
and you
of
probably.
the envelope.
That's back of very, very light back of the envelope. You probably don't even need that much, right? Because there's probably other things happening. But that's a very conservative way to look at it. But I think most people really don't put a lot of thought into it. I mean, think about how many tens of thousands of hours people work, and they're doing it, most people, so they can be independent. Just take a couple hours a year and just make sure you're thinking through what you actually need and when you need it. So you can be having all those hours of your work go very specifically towards your goals.
What do you make of? So there was this survey done by Northwestern Mutual, and some interesting data points. So they said the average that people expected to need for retirement is around 1.3 million, and there was variation by age group. Once you got up to the 60s or 70s, people said they needed a little under $1 million. Younger people saying a little bit more. In their 50s, I guess that group said they needed the most. And that, a couple of things stand out in terms of this survey. One is, as you said, that average can vary greatly. It doesn't take into account all of these different variations in where you live in the country, what you're doing, do you have debt? But the other thing that struck me as pretty incredible is the amount that's currently saved, particularly for people in their 50s versus the amount that they expect to need. So are these people never going to be able to retire? What is this gap that's going on here? What do you make of that?
Well, I do think that a very significant part of the population does not have enough money to retire, is not on track for retirement, and is underestimating what it takes to step it up. And the reason is, a lot of people go, well, I'm going to get to my higher income needs. My kids are out of college. I take all that money, I'll start saving. But you're missing the number one factor that drives investment returns, and that is time. So you really have to get in front of this. If you're young, just put away money. Even if it's a small amount, putting away a small amount in your 30s and 40s is much more important than putting away a huge amount in your 50s and 60s. And so I think that's the missing piece of equation. I think we've got a retirement crisis coming because we have this huge wave of people that's not prepared for retirement. Social Security has not kept up with it never was enough to cover everything, and that wasn't the purpose, but it's definitely not kept up with even substantively subsidizing things. And so I do think we have a problem on the horizon with people that are in their late 40s and early 50s that are not going to be able to rely on Social Security to cover as much as they needed, and that don't have that are not on the right path.
And what I guess there's a few different things they could do about that. One would be, none of them are really optimal, but one would be simply to work longer. And if you look at surveys of people, they are expecting to work longer. I think a few years ago, the average expectation was 61, and now it's up to 65, and perhaps that'll continue. And there's some benefits to that as well, and we can talk about that. But that's not something that most people, if you ask them, would want to do. But perhaps because of this gap, they might be forced to do. And the other thing would be to lower their spending expectations. Not something people want to do, but that would help with the math and the equation. What do you make about those? That's things. Those are certainly within your control, more so than hoping for huge market returns, let's say, to make up that gap.
That's right. There's a lot of things that you could do to move the needle. I think it's fascinating about retirement is when I started my career about a little less than 20 years ago, most people wanted to retire in their 60s. You do 100 financial plans in 100 days. 90-something of them would tell me, I want to retire when I'm 64, 65, 66. Now, you have people that want to retire when they're in their early 50s, and you have people that tell me they're never retiring. The philosophy about retirement is just really radically changed. There's a very big group of people that are very aware that you need to have purpose to live a long, happy life, and a lot of people get that purpose from their work. There's a lot of research that shows that people who retire die younger than people who continue to work. So you have this big group that love what they do. They've watched their friends retire, their parents retire and not be as happy, or they're concerned about health, purpose, so on, that are living longer. And you have a whole group of people that are like, oh, I only live once, and I've got to retire right now and do everything I can right now. And it's been fascinating watching that change, for the first time in generations. Right? It used to be no one ever retired. Life expectancy when Social Security came out was in your 60s. You basically worked, and then when you got Social Security, your life expectancy was actually zero. On average, the average person retired and then died the next day. I mean, so now we're living a lot longer, and I think people are starting to think about their quality of life a lot more, and post-COVID really caused all of that to spike.
Yeah, no question. I guess the best goal to shoot for is to have that within your control, right? To have enough where you can make the choice. Do I want to keep working? How much do I want to work? Maybe I want to do something different in retirement in terms of work, or something that brings meaning to you. For everyone, that's different. But having wealth gives you that freedom to pursue that. So speaking of that, and talking about saving early as the main way to get to that point, what do you think about savings rates? And so there's the average savings rate. Vanguard did the study. Average savings rate's around 7%. If you're looking at 401k plans, that's the average deferral. When people ask you, how much should I be saving, Peter? Someone just starting out in their 20s and 30s, I think what I often say is as much as you can, right? And not everyone can save 10, 15, 20%. Like, it's not realistic for everyone. So save as much. But is there a number that they should be shooting for as, let's say, a baseline, a minimum in terms of a savings rate?
So I never use a number. I just say it doesn't matter where you are in life, it should be something. So I always start by basically saying, okay, what's your goal? And let's go backwards and figure out, what do we need to set aside for what you're setting aside to grow to match your goal. That's the starting number. The second thing to consider, though, is there are certain experiences that expire. Right? Like if you're graduating college and it's the only time you can go backpack across Europe with your buddies and do it in a specific way, right? You're going to be in hostels and you're okay sleeping on the floor and all that stuff. Well, we don't want to miss that experience because that experience expires. So maybe it's okay to not work that summer and save, because the idea is to save what you need to hit the goal, but without overly compromising the pleasure and joy of life right now. And so to me, that's the answer. Now, even in those scenarios, I like to get people to save even 1%. You just have to be in the habit of always putting money away. The other thing that happens is when we run these plans and say, well, you've got to save $500 a month to hit all your goals. Well, you probably don't really need to save that much because your income is going to go higher as time goes on, and you don't need to save 500 a year or 2 or 3 from now. You might be saving 600, 700, 800. It's going to feel like 500. So back into that number. Don't overly compromise your life today for a tomorrow that may never come or that you can't experience the same way.
Yeah, so you have to delay gratification, but don't delay all gratification, right? I think that's a good point there. But in terms of the number one thing people can do, they have a job, they have a 401k. You often talk about it, but it's really can't be said enough, right? Everyone's worried about or trying to earn a higher return in the markets, right? That's in our business. That's all everyone could talk about. And there's only one way I know of, Peter, where you can earn literally 100% on your money every year, right? And that's the 401k match. And how important is that as a starter for people to put away enough money up to the match? How important is that? For
this is
people
the
as
only
a basic?
thing. One of the only things I can think of in financial planning where you can say this is a no-brainer. Like if you're at a job where there's a 401k and the employer will match any amount you put in the 401k, that's the amount you should contribute. If they'll match 1%, 2%, 3%, make sure you put away that 1 or 2 or 3%. They're giving you 100% rate of return. You are not getting that anywhere else, right? This risk-free 100% rate of return, definitely take it. Find a way to claw your way to at least that amount in your 401k.
Yeah, great rule of thumb. And if you include that company match, that bumps up the average savings to almost 10% for people that participate in these plans. And what I like to tell people also is don't discount the value of Social Security. As you say, it's not likely to meet all of your needs, but it may meet more than you think. And thankfully, given recent inflation trends, thankfully it's indexed for inflation. We saw the biggest bump up in the Social Security payments the last 2 years because they're indexed for CPI. And so they've jumped up significantly. And now the average 65-year-old is now bringing in around $30,000 in Social Security. That's not nothing, right?
No, it's a big deal. It's like having a $700,000 bond. So I think people are stunning what you really get from Social Security. This is part of why this system's economically bankrupt. Not literally, but economically bankrupt is because when they set this up, people were living into their mid-60s. Well, now the average 60-something-year-old's living into their 80s. But they're getting something that's the equivalent of a $700,000 bond. And it's an incredible asset. For most people, it's not going to be enough. Even for a married couple, it's not going to be enough. But it makes a bigger difference than a lot of people think.
Oh, for sure. And it has that built-in inflation hedge, right? And that's a huge factor. So all in all, save as much as you can, start as early as you can, and take advantage of the company match. And in terms of the calculating how much you actually need, you're not going to be able to do that in a minute. You have to really lay out your income and expenses, and you have to make some guesses as to how much you'll be spending, right? And your health is the most important thing, Peter. You've talked about this in retirement, but that's going to be a huge factor in terms of how much money you're going to be able to spend, right?
Yeah. And these things are all dynamic. They change. The economy changes, investing changes, your health changes, your outlook changes. Your net worth changes sometimes by surprise, and that's why this is something you got to revisit.
Yep, absolutely. So let's switch gears here. Let's talk about something that's big news, right? Supreme Court had a few rulings. Number one, we're going to talk about the student loan debate, and this is a good debate to have for people. What I'd like to see is a return in this country to civil discourse where we can disagree,
good luck
agree,
with that, Charlie.
whatever. I know you can't get that on Twitter, so I've stopped engaging in this type of stuff on Twitter. You just can't simply have any type of intelligent back and forth there. But in terms of the Supreme Court, what I love is the history of Antonin Scalia, Ruth Bader Ginsburg, two people opposite ends of the spectrum, conservative, liberal. They didn't agree on many things, but they were best of friends. They spent their families, spent holidays together, and that's a great thing. And yes, it's idealistic, but hopefully we can get to that point. So regardless of how you feel about the next few topics we're going to be talking about, we should be able to talk about it and disagree and still be friends. So with that said, the Supreme Court ruled that the power of the purse, and most people, kind of understand this, rests with Congress, and that the president, through executive order, what they said in this student loan decision, the president couldn't forgive this huge amount of debt. They couldn't use the loophole which they were using under the HEROES Act, which was passed after 9/11. They couldn't say they could do wholesale forgiveness based on that act. That there was too much of a stress. It would have had to have been passed by Congress, which was what many people were saying at the time. That's what the Supreme Court ruled. What is your take on the Supreme Court ruling? Was this the correct ruling? Was this plan constitutional in your view?
Well, so I think everybody, I think even the Biden administration knew this was not going to get through the Supreme Court for a lot of reasons. So, but setting aside the legal component of it, I just think it was the wrong question. So I think there's a big political fight about this, like, should we forgive people that have student debt or not? And to me, that this is missing the whole point. We have a crisis when it comes to student debt. Why does that crisis exist? It exists for a lot of reasons, but one of them is the government came into the system and said schools are expensive. We want people to get to school, so we're going to loan you money at really low rates. And so they loan money to everybody, not really paying attention to who's getting it or how educated they were about what they were doing. Those students are then getting wooed by universities that are selling them $50,000 degrees and things that don't translate into income. So you have a bunch of people conspiring together that are putting these students in harm's way. And now everyone's waking up and going, wait a second, certain degrees don't translate into income. If you look at universities now, a lot of them, their liberal arts programs are struggling. And I've got a variety of majors. Several of them were in liberal arts, so I'm not critical of it. But let's face it, some of those things don't pay what science and math and technology and law and business and medicine pay, right? So people today are getting a little smarter about, hey, what degree from what school matters and all of that. But there's a whole generation that got punched in the face with these rising education costs because the government was loaning money basically for free for people. One problem with student loans is that just everyone was getting them regardless of what they were doing without any education. The other big problem is if you have somebody with a lot of debt in the United States, you can declare bankruptcy, but you can't get out of your student loan debt, which doesn't make sense to me, right? If you owe the credit card company money and you opened a business that didn't work, and you can't get out of this. So you have people that are really under the thumb here. So we have to address this through a variety of things. One, we could look at government lending is a disaster and needs to be completely changed. There needs to be counseling that goes with it. We're going to loan you money, but how are you going to use the money? Where are you going to go? What's the major going to be? We got to make sure that you have the capability to get a degree that will pay back this loan to the taxpayers that paid for your education.
And the government wasn't always involved as they are today, right? It's just increase. Yeah.
That's a very, very big part of this. The second part we have to think about is what kind of precedent are we setting? So let's think about two students, right? Let's say you have two students from the inner city, and they both got big loans, and they went to a school. But one student at the last second said, you know what? I don't want this big loan. I'm going to accelerate my education. I'm going to do it in 3 years instead of 4. I'm going to go to community college for the first year to cut my costs. I'm going to work 2 jobs. My mom and dad worked an extra job to pay my way through. That person does all the right things, gets the right major, and now has no debt, graduates with no debt.
Yeah.
Why? Because they planned out their college and because they worked multiple jobs or their parents did. And you have somebody else who then borrows a lot more money, goes and gets a degree that won't translate. They decide not to work when they're going through college, and the parents don't work an extra job. And now we're saying to the person that did everything, we're giving you nothing. And the person who didn't do anything, we're paying off your debt. Now, I'm not saying that's the people with debt. I'm just giving an example. There are people that worked their way through college. I mean, I've got a foundation that pays scholarships for people in the bottom 1 or 2% of the population, and I've seen what they will do to work their way through college to not have debt. It's strange to me that they would get nothing in this formula. We have to have, number one, a way to fix this system because the system is broken, and whether we forgive this debt or not, the system remains broken. So you have to fix the system. And second, we have to have an equitable and fair way to do this. Let me tell you what people are asking me now. So we have a place called Pathway Education Center in the inner city where we do education around financial things. We've got people that we do financial planning for at Creative Planning that just need help. We've got people that are doing really well at Creative Planning. And you know what a lot of them are asking about their student loans? I don't think I'm going to pay them off because I think the government might forgive it in the future. Is that really the precedent we want to set? It doesn't make any sense, right? So I agree that there is a problem here. There just needs to be a fair and equitable way to resolve it, and there has to be a way to prevent the problem from continuing.
Yeah, so the plan never addressed, right, the underlying issue. And in many ways it exacerbated it. And in terms of fairness, there's any number of ways we can look at this, Peter, but for number one, I would just say it's a regressive system, right? The average lifetime earnings of someone who goes to college is over $1 million. If you look at people who don't go to college, it's way, way lower than that, right? And those people are suffering from massive credit card debt. So why would you say that the student loan debt is any worse than the credit card debt for that lower income group? It isn't. You can't justifiably say that, right? So just from on the level of fairness, if you were doing it on the basis of trying to help the lowest income portion of the country, and that would be an act that Congress could pass, right, through some type of stimulus or some other measure or some broad debt forgiveness. They could do it that way. You wouldn't start with student loans, right? You would start with somewhere else. But all of the other reasons you mentioned, like in terms of what if you just paid off your loans, what if you're just entering college today, scholarship, you work your way through school. I think if you ask most people, maybe even some of the people with student loans, but certainly the people without them, they would point to all of these things, and incentives drive everything. So if you remove that incentive, so let's say you did set the precedent, and let's say, okay, so Nancy Pelosi said, before this, and the Supreme Court actually cited her in their opinion that the president can't do this, right? That he could postpone, he can delay, but he doesn't have that. It has to be done through Congress. So let's say Congress decides to now take this up and do it. They didn't have the votes the last time, but let's say in the next few years they do it. They have to think about what incentive then they're giving not only to the student who's taking that out, but to the university itself, right? These universities, what incentive do you have to be more efficient, to provide a lower cost offering if it's essentially going to be subsidized, right? It's going to be a debt that's issued and then forgiven, right? And that comes to the heart of it. It just would likely, come back to the elephant in the room, would likely just drive up the cost of education more, right? Which is not the goal, right? Then it's a perpetual cycle. And so I think, just coming back to the basics, the solution to the problem was the problem itself. The problem was too much government involvement. If we look at the two areas in the last 30 years that have had the biggest increases in terms of inflation, it's healthcare and it's education. And in both areas, we have to be honest, the government's taking a massive role in both of those, limiting natural competitive forces, right? Why isn't there, and this, I'm going to give you my solution, and then you can give me yours, but I think it's going to come regardless of what happens with all of this. I think the solution is technology, and I think that in the next 20 years, there's going to be company, whether it's Google or Apple or Microsoft, these trusted companies that are going to offer their own version, their own Google University, where you get an online degree and it means something. And it's because it's a very hard program to get through. It's open to everyone, and the cost of it is 1/10 of what the university is offering. And they bring in the best professors and they stream that to everyone. They have everything streamlined. It's hard. It's competitive. And it's just so much more cheaper and affordable, and it's achieving the goal of actually educating people in fields where they can get jobs. So that, to me, I think that will happen if you allow competition to go to work. But if you pursue these types of ideas that are just putting a Band-Aid on things and subsidize it, it's just going to make it worse. So that, if I had a magic wand, that's what would be done. I think it's going to happen. It has to happen, not only on the college level, but at the high school and earlier levels as well.
I 100% think that's what's going to happen, and I actually don't understand how it hasn't happened yet. I don't understand why some tech companies like Salesforce don't have 2-year colleges with their certificates, and people go to it, and then if they go work for the company, they get their cost of education forgiven. Or even, I don't understand the big four, why they go to universities and spend all, in the accounting world, they go to universities and spend all this money. Why don't they create their own accounting program and people actually pay them for their education, which would cost much less than today? The degree would be much more meaningful in real world and much more translatable. So I think that's coming inevitably at some point.
Yeah, no question. So we'll see where this goes from here. For now, there's going to be a lot of angry people. Debate's going to go on forever, but in terms of the Supreme Court, that was not the only big ruling that they did, Peter. They came back to affirmative action. There was this lawsuit that was brought Harvard and UNC, University of North Carolina, and this time made it all its way up to the Supreme Court, and they ruled differently. And essentially, the majority opinion said eliminating racial discrimination means eliminating all of it. So you can't have this discrimination is good, this discrimination is bad. It has to be all bad. You can no longer take race on its face into account in terms of admissions. And if you look at the petition that was brought by an Asian American group, they forced Harvard to kind of reveal what they were doing systematically, which systematically they were admitting Asians at a much lower rate, even looking at the top performing Asians versus other minority groups who had much lower scores and GPAs. They were admitted at a higher rate than the Asians in the top decile. And on its face, it's hard to make the argument that that isn't some form of discrimination. And under the 14th Amendment, the Equal Protection Clause, pretty easy to say that's unconstitutional. That's what the Supreme Court has said. Now, what are the implications of this in your mind for not only universities, but other areas of the economy, just in general?
Well, I think we're asking the wrong question about education. Everyone's fighting about this thing that can move the needle for these different groups that are arguing about it, but not as much as people think. First, let's start with education itself. Education is an enormous differentiator. If you have a college degree, you're projected to make $1 million more than people without a college degree. That's a very, very big deal. Now, there's all kinds of people online that go, you don't need a college education to succeed. That's true. You don't. You can succeed a lot of other ways, military, trade school, in fact, none of those things, and you can still succeed. But the probability of success goes up dramatically with a college education. So if you had to choose, can I wave my hand and have a college degree or not? What am I most likely to have more economic strength? It's which a college degree. And so that's a very big part of creating a socially strong society and bringing, we need all of people from all ethnicities to have this experience, to be able to have that same access to that college degree so that we can have that economic opportunity for everybody. Now, the issue is that the education system's broken. I mean, no matter where you sit on this affirmative action thing, I've got news for you. It doesn't move the needle enough. Of course, it moves the needle for the people involved, whether you're on the Asian American side of this litigation or the African American side. Of course it does for any given person. But as a society, it doesn't. And the reason it doesn't is because we're not talking about the right things. And the right thing is the way we think about education in the United States is ridiculous. And I would actually say it's disgusting. So if you think about the way we're treating universities in the United States is we're basically saying, okay, these great schools, the Harvards, the Yales, the Princetons, how do we decide they're great? How do they wind up at the top of U.S. News and World Report? That one of the main ways is by bragging about how many people they don't give education to. It's like there's Gucci bags and Versace. Yeah. That's not how education should be.
Why the lowest acceptance rates? That's what.
Why are we trying to create this scarcity here? It's disgusting, right? So if you are really the best in the world at educating, how about we find a way to really reach a bunch of people all over the United States? Or why are we even stopping in the United States? But can we get Harvard into the inner city and every inner city of the United States? Of course you could. Can we get Princeton and Yale in there? You're telling me they're not capable of using Zoom to teach education? The people that we study Harvard Business Reviews, the people that tell us how businesses do things great, can't figure out how to scale what's easily one of the most scalable things in the world, which is education. We should be shaming these they're private institutions. We shouldn't pass a law that says you have to teach other people. We shouldn't pass a law that says you can't have legacy. Well, I got news for you. Your dad, your grandpa, your great-grandpa was probably white, right? That's the definition of institutional racism, right? To favor people based on that way. Education is one of the biggest institutions in the United States. It's one of the biggest dividers of socioeconomic wealth and well-being and breaking the cycle of poverty. And we have literally the most institutionally racist thing existing in these institutions. Do they have every right to do that in the United States? They do, because these are private institutions. Should we
that take public money? right?
That's right. But here's the answer. We should be shaming them into not doing it. They should get you should get no government loans to go to one of these places, and you should lose your tax breaks for your endowments. You can't have a $50 billion endowment and tell me you can't find a way to educate people that you supposedly care so much about, right? So if you want to fix the system, we've got to make it where these institutions are interested in actually educating people, not just the very tiny select people that they're going to let in so they keep their little club and stay at the top of U.S. News and World Report. Get rid of the government subsidies, get rid of the tax breaks for their $50 billion foundations, and guess what? You're going to solve this problem in a way that's about 1,000 times more meaningful than what everybody's arguing about today.
Yeah, and maybe start earlier before you get to this point, right? In terms of waiting to get to college before you're going to try to improve things for Americans. Let's start with early childhood education. In my view, there's been the lack of school choice at a fundamental level has been a big driver of disparities in terms of different communities. And if you give what we've seen, if you look at New York City, that now spends $40,000 per student, is that throwing more money out of it at a problem and not changing the way you approach it is not going to help that situation. You're seeing the test scores actually going down there. Reading levels are not improving, and they're spending more and more money. And if you give that student choice, if you give the parents to that student choice, they will make what's best decision for that family. And creating more competition, I think, at that lower level will help a lot of people. It's not something that Harvard is thinking about or these other universities are talking about. But that's a huge thing that I don't think gets enough attention. So,
well, I got a newsflash for everybody. These schools, they don't care, because if they cared, they could find a way to scale this education. That's not what they're interested in. They're interested in pretending like they care, and having dialogues and statements like they care, but not actually taking their opportunity to get the best Do I think that the teachers are better at these Ivy League schools as a group than other universities? Yes, they are. Why are we keeping them confined to such a tiny group of students? Why are we not saying, why don't we make America as awesome as possible? Why don't we give as much opportunity as possible to people that can't afford it? It's extremely inexpensive to deliver this at scale. There's no interest in doing it. That's the thing we should be talking about.
Focus on equality of opportunity and stop trying to make the outcomes exactly the way you want it, right? Stop picking a percentage or a number and saying if this racial group doesn't go to that number, then it's not right, or this, like that never leads to a good place if you look back in history.
There's a few dozen universities that if they wanted to, they could change the complexion of a generation of Americans, and they could do it in about a decade. It is a very easy path here to scale top shelf education, and just nobody wants to do it.
Yeah, but it's still at the end of the day, Peter, and I 100% agree with that. Give the opportunity to everyone, but at the end of the day, you have to then determine what at the end of that road is it going to be a meritocracy. And
right.
I have a fundamental belief it should be a colorblind society. That was MLK's dream, right? That you'd be judged on your content of your character, right? And if we have a meritocracy, not everyone might think that today, but I think if we look back in this ruling 20 years from now, 40 years from now, 50 years from now, I think more and more people will say, yeah, that was probably a good idea not to have race being a factor, just as it is in sports, right? We don't say that the NBA or Major League Baseball or any other sport has to have a certain percentage of each race. We say we want the best players on that team, right? And if Harvard is going to be the best university in this country, and we could debate whether it is or it isn't, then as long as it's taking public money, it should represent the best, whatever that percentage is, and let's treat everyone as individuals and human beings. And again, that's controversial today, but I don't think it will be with the test of time.
Well, I think really reasonable people can disagree with what you just said, I just think that we're missing the bigger question. And I think while we're talking about the Supreme Court ruling, I just think it misses the boat. I mean, whether we have affirmative action or not, we've got a problem in the United States that the best education is not accessible to people all over the country. With affirmative action, there was a little bit bigger group that could get into it that might not have otherwise.
Yeah,
but
you're
it's
talking about
not.
a tiny fraction. What about
Yeah,
all the
we're
people
we're
that
not
don't go to
we're
college
not
at all? All right.
we're all looking the other way from the big problem, and the statements from the universities just they drive me nuts because no matter where you sit on this issue, these universities are in a position where they could really change things, and they're waking up every day and they're going to work and they're deciding not to. It's just that simple.
Yeah, I'm not going to read into their their motives. Yeah,
I don't
yeah.
have any feelings about this at all, Charlie.
Yeah, no. So we could talk about this forever, but let's move on to something that impacts everyone every day. That's your happiness level. And for a long time, Peter, we heard that money wasn't everything, right? There was that famous study from Kahneman, right, that said, yeah, your happiness goes up with incomes, but at 75,000, it kind of levels off, and more income above that level, you have diminishing marginal utility, right, in terms of economics 101. Then in 2021, another study out of UPenn said, no, maybe that's not the case. Incomes continue to go up over 75,000, and people's happiness continue to go up. So people were saying at the time, well, now what do we do? Which one is it? One right? One, how do we reconcile the two? And so 2023, fast forward, they got together, they did this other study, won't get into the nitty gritty of it, but essentially what they found was the reason for the discrepancy. They asked different questions as well, and different monitoring, and it's an interesting thing. So I'll put a link to the whole research report. I recommend reading it. But what they said is that there are certain people that their steady state, let's say their emotional well-being, is just at a lower level, and for those people, more money after a certain point, doesn't matter how much, it really isn't going to improve their happiness. But if you're in a good place in terms of your emotional well-being, or a very good place, then more money will increase your happiness. And actually, they found that the top group in terms of people's emotional well-being actually accelerated with more money. What do you make of all this in terms of the relationship between money and happiness? You see it every day in talking to clients. So you see many people that are extremely wealthy, not very happy, and then you see the opposite, where they don't have a lot of money and they act in a way that you would think they have all the riches in the world.
Yeah, I find this research fascinating because for the longest time, it was just accepted in the industry that, once you got past 80,000 or whatever, it makes no difference. And that didn't really square with just my observations sitting with clients every day. It definitely made it. It definitely
most people.
This theory then that once your basics are met, that your happiness level is set is just ridiculous. I mean, because it's not really about money for most people. Most people are not like throwing money in a bathtub and jumping into it every night, right? What they want is they want to do other things. They want to provide their family economic security, or they want to pay for their kids' college, or they want to vacation, twice a year, or if they have more money, they want to vacation a third time a year. And so, I mean,
they see other people doing that, right?
Yeah,
so
or they want to do charitable. They want to do charitable things, right?
You don't live on an island.
Yeah, or from from a jealousy place, they see somebody do ABC and they want to do ABC. But in all those instances, people are generally happier if they can help their kids more, they can be more financially secure, they can give to charity or whatever. And so I do think that for most people there is that some cutoff. But for people who are really well emotionally adjusted, I just see them really embrace it. And they tend to be very focused on things that are bigger than themselves, and they get a lot of gratification from it. What I don't see is people just piling up money to pile up money. They tend not to be super happy people.
Right. So so you put out this great tweet. What are some other ways, talk me through this, other ways other than money that you can improve your happiness level? And I think this is really important, right? Because these are all things that are within our control, right?
Yeah. At our annual meetings, we've had speakers on happiness multiple times, and I've written a lot about this because I've become fascinated by this by my clients and by people I work with. And I just really have been fascinated by people that are happy and people that aren't. They can have the same socioeconomic background, same everything else. And really the research, I think it's really solid because when I observe the people that I perceive to be happy, they match the research, which says, people that complain, you're generally not a happy person. If you find yourself saying negative things throughout the day, but people who are the whole opposite end of the spectrum, they're grateful for things. They're proactively thinking about what they're grateful for. When they think something positive about somebody, they immediately tell them. They don't hold it in. That's saying you're the sum of the 5 people you hang out with the most. If those 5 people are happy, you're probably happy. If those 5 people are miserable and complain all the time, well, guess what? That's going to be you someday. There is conflicting research. In my experience, people have more fun with experiences than buying things, but I don't think that's always true. I think people that love cars, it makes them happy to buy cars. So go do it. If you
Yeah.
love buying baseball cars, go do it. So there's a lot of conflicting research on that point. And you do find that happier people, we know it also leads to longevity, is they're kind people and they spend most of their time with family and friends. They really have a strong, small social network. Doesn't have to be 100 friends, but they've got that 3, 4 friends that they're really tight with. I have found that research in happiness and longevity very consistent with my observations of our clients and what their lives have been like. And so I'm fascinated by this subject. And what I love about all these things is they're all within our control. We control these things. We decide every day, are we going to be grateful for what we have, or are we going to complain about what we don't like or what we don't have? We control who we hang out with. All of those things are
So you're on the left side
yeah.
of this
Yeah, I
street,
like to be on the
Peter?
left side of that as much as I can.
Have you ever done the no complaining diet? I did it once. 30 days. Try it. You don't have to do 30, but there's a 7-day version as well. 30 days, no complaints whatsoever.
That's
And
hard.
at the end of the 30 days,
yeah,
I'll
that's big
tell you,
ask.
Peter, you feel pretty good. You're exhausted. It's you have to watch yourself, but
Yeah.
your whole attitude changes when you're rethinking, like, being grateful for something as
Yeah.
opposed to complaining about it.
Yeah, I think if you
And
get rid of if you can, on top of that 30 days, every morning think of 3 things you're grateful for. I think
yep,
that's a double whammy that can really change your mindset.
yep, no question, no question. And one of the things in terms of mindset, I think extremely important, right, to think about every day, because there's going to be things that aren't going your way every single day that you have absolutely no control over. And separating out those two and making a list. This is what I can do today, right? In terms of eating healthy and exercising and your attitude, right, versus all these other things. You can't really overstate how important that is. Just remembering what's in your control and what's out of it.
Yeah. Yeah, I mean, I think that it's such a big part of not just happiness, but contentment and letting
Yeah.
things just roll right by you. If you can't control it and you're getting worked up about it, what a waste of energy.
A big thing for me, Peter, years ago, it's going on a long time now, is not reading or listening to the daily news. And a lot of people think that's crazy. You got to know, you have to be informed, but really, almost everything you hear in terms of that stuff is outside of your control. You can't do anything to help that person if it's a horrible story. Focus on your local community where you can actually have some control over things. And the news is mostly has a negative bias to it, right?
Oh,
So you're
God.
constantly being
Yeah.
bombarded with that. It's going to affect your demeanor. How could it not?
Yeah, it's garbage in, garbage out. If you've got if you've got negative information going into your mind, it's coming out of your mind. If you've got sad music going into your mind, don't be surprised if you're sad. I mean, what
Yep.
you're reading, what you're watching, what you're listening to, all of those things obviously impact your well-being and how you think about things. Cutting the news out completely. Like, I mean, I will sometimes during the political season rotate among all the stations, get like 2-minute clips of each just to understand what people are saying. But for the most part, after that, the negatives outweigh the positives completely because it's a constant barrage of negativity, and it can't help but affect your mood. I thought it was interesting, maybe 7-8 years ago, could be longer. 2 folks out of K-State, professors, did a research on people that watch financial media, so financial news,
Yeah.
and they actually had more health issues.
Not this type of content, right?
Right. Yeah. Not this. Yeah. They had more health issues as a group, and I completely
Wow.
believe it because if you're
Yeah.
have all that negative energy, coming into you all of the time, stress. I mean, it's not. You can't have a positive. You can't. You just can't watch negativity all the time and have a positive outlook.
Yeah, no question. Get news out of your mind. Try to think longer term, long form. I think that's a great thing for everyone. You read a book instead of watching that news clip. And so that brings us to summer reading, Peter. This is going to be a recurring thing for us where we give our recent things that we've read, find interesting, and people are going to be traveling a lot this summer. Good news here. If you look at travel numbers at TSA, so number of people flying every single day. We've now finally, and no one I think predicted it would happen this soon, 2023. We've surpassed the 2019 biggest week. So this last 7 days of travel around the July 4th holiday, 2.6 million per day airline travelers. That was higher than any period in 2019. Travel industry's just booming. People are making up for lost time with experiences. So good on them. And so you're going to have more time to read. And let's talk about a few books that we found interesting. I'll start off here. Killers of the Flower Moon. It reads as if this was a made-up story, but it wasn't. It's so absolutely incredible. You say this couldn't possibly have happened. Focuses on the Osage Indian tribe in Oklahoma. So when Oklahoma was becoming a state, they're giving parcels of land to each and every member of this tribe, and it just so happens to be the land underneath this land is one of the biggest oil reserves in the country. So overnight, and they have the rights to that. Overnight, they become essentially among the richest people in the world, and that was a good thing in the very short term. But then things started to go wrong. I won't give away too much, but one by one, you start to see these strange deaths of people that accumulated this wealth, and the FBI has to get involved at some point. A lot of people consider it the birth of the FBI because of what went on. I won't want to give away any spoilers, but just absolutely incredible story. So recommend that. And there's actually a movie coming out this October with DiCaprio and De Niro. It's directed by Scorsese and a number of other, and looks to be pretty good. So definitely check that out. And
that's a hell of a lineup. I think no one's going to read the book now. We're just going
to read the book first, and then you'll have the visualization of the characters. Yes, go ahead. So you got a book here. Interesting, different topic.
Yeah, mine's The Elephant in the Brain, so hidden motives in everyday life. I thought this book was fascinating, and these researchers basically go through why do we do what we do, and it's interesting because they basically, the thesis of the book is we really deceive ourselves. Like, we think we're motivated to do certain things for certain reasons, but sometimes we have self-motivation even more than we're willing to admit. That when we look at other people, we tend to look at them in an unforgiving way. When they do something, we look at it and go, they must have done that for this negative reason. But when we do things, we measure ourselves by our greatest intentions and our greatest moments. And it goes through the psychology of, historically and why it is that we do those things. So it's a long book, but a lot of different research that really, I think, it got me thinking and reflecting a lot about the way we make decisions.
Yeah, there's a lot from an evolutionary standpoint, right, that we're wired to do that we don't appreciate, right? How much of that is kind of outside of our control, so to speak. All right, awesome. So check out those books, and we'll try to do this every time if we can, give you some more books to read, definitely for the summer. So Signal, Illinois, Peter, we just got a new update on real GDP for the first quarter. I think it was the final number there. It was revised higher. So good news. All the recession predictions that people had coming into the year, they're being pushed back. And now you're hearing people saying, well, maybe it's not going to happen this year. It'll happen in 2024. Beyond that, what does the GDP mean to you? We hear economic growth and we hear the stock market, and it's always, the two are always tied together in terms of the implication, right? If the U.S. economy is doing good, that's good for the U.S. stock market. Economy's doing bad, that's not good. What should an investor do with, we get this update every single month. What do they do with GDP and economic growth in general?
So we know over the very long run, stock prices will follow their earnings, and we know earnings come from economic growth. The issue is, it's over the very long run. The short run's too dynamic. This is completely irrelevant information month to month or quarter to quarter.
There's the long run
even year to year. Even year to year. Yeah, so you start at the same point, you end near the same point. But as you can see from your chart, along the way, forget about making decisions around it.
Yeah, so 100% noise for me in terms of, and it's a weird thing because we're thinking if the economy's doing bad, that means earnings will go down, and yeah, that does often happen during a recession. But stocks are a long-term instrument. They're a long-duration instrument that's looking out, let's say, 30 years or 40 years into the future and summing up all of those earnings and then discounting them back to today. So a single year of a downturn is not, it shouldn't have this dramatic effect. It could, but it may not, and the stock market can often look forward to it. And what is absolutely incredible, if you look at the correlation between the two, is that the correlation is only 25% from year to year. So if you take the R squared of that, and that simply means that only 6% of the S&P 500's move is explained by changes in real GDP. So if I told you GDP is going to be 4% next year, which would be a pretty high number, the average over the last 20 years has been about 2% real GDP, you couldn't tell me with any certainty what the stock market was going to do. You could take a wild guess. And if you look at the two columns, Peter, what will jump out immediately to you is how much more volatile the stock market is than economic growth, right? So if we took a standard deviation of the two, the stock market's 4, 5, 6 times more volatile than real GDP. And the simple reason for that is market participants are very emotional and they change. That emotion can change on a dime, and they can become very pessimistic or optimistic. So their emotions change much more than the actual earnings change or the economy is changing. So you'll see very strange things in 2020. We've talked about it before, but we can't state it enough. I think you had the biggest decline in GDP since the 1940s, right? And people thought it was going to be, for a brief moment, another Great Depression. Stock market ends that year up 18%. Last year, real GDP ended up being positive. Stock market's down 18%. So we could pick out other years where similar things. It's nearly impossible as an investor to say with any certainty what's going to happen to the economy, what's going to happen to the stock market based on the economy. So kind of throw that out. And what I like to say, one line simply, the stock market is not the economy. So even if economic growth is slower in the future, and has been already slower over the last 20 years, 2%, that was lower than the 20 years before that, which is lower than what we saw in the 1950s and 1960s, right? We've had this slowdown in economic growth. We haven't seen that affect corporate profits, right? So corporations and the profitability of those corporations is still increasing at a pretty high rate, very different animal than the U.S. economy. So signal or noise, economic growth, you can look at it, but don't make any investment decisions on that. All right, Peter, I think we covered a lot of ground there. Went from books to the Supreme Court, probably to money and happiness, probably the only podcast out there that's covered all those different topics. So if you like that type of content, subscribe to the channel for more content just like this, and we'll see you next time on Signal or Noise. Thanks for joining.